the thing I learned in working around the UN Rio Plus 20 conference last year was we built a coalition that had about 100 institutions within it, including $50 trillion worth of investment institutions, plus, more importantly, a number of UN agencies and NGOs. Those UN agencies included the UN Environment Programme, the UN Conference on Trade and Development, and the NGOs included Save the Children, Christian Aid. We also had Stakeholder Forum, the UN Stakeholder Forum working with us, and a number of other NGOs who, whilst they couldn't join our coalition, did help support the call to action that we had at Rio Plus 20. Now, we ultimately got paragraph 47 around promoting more corporate transparency out of Rio Plus 20. It's a weak paragraph, but it has gone on to help support the European Commission in proposing, I think, a strong proposal on narrative reporting. The thing that I want to highlight here in transition is that if it weren't for those NGOs and UN agencies being part of our coalition, we as investors would have had no idea, really, how to engage with the public policy process. Conversely, I like to think that we helped educate the NGOs that worked in our coalition about specifically why they should promote the specific clause that we were calling for on corporate transparency. And I think there's a real mutuality of interest here. We run nearly £400 billion on behalf of 42 million customers. That 400 billion, that approaching 400 billion, is at risk because of unsustainable economic development. Now that means we have a shared interest in working to change the way the economy is structured. And it is governments and policymakers that structure the economy. And while some of us might want to move money from, say, oil and into renewable energy, for the greater number of mainstream investors, that won't happen until the money to be made in solar is more than the money to be made in oil. And the way that happens, that's a massive market failure, and it's for governments to correct that market failure, and it's for investors to work with NGOs to help put pressure on the governments and the policymakers to make that change. The thing that I would do now, this is a very, very select audience of people who actually understand how the system works, the financial services system works. I think there is a massive asymmetry of information in the consumers and the sellers of financial services. If only those that consumed the products knew what they were buying, not just through transparency, but also through financial literacy, then I think the people who sold the products would be able to get away with far less. So it's a long-term solution to the problem, but I would change the syllabus on financial literacy from about 6 years old upwards, all the way through university. That would be on day one. On day two, I'd go on to look at fiduciary law. It was mentioned in the Q&A on the votes. It does need to be much clearer for trustees that they should be integrating environmental, social and governance issues into their investment processes. It's not just trustees, pensions have been the focus here, but there are other big asset owners. Insurance companies are one of them. I work for AVIVA. So I would change fiduciary law, I'd make that much clearer. I'd also make it clear to my people at BIS that the engagement they're about to have with the European Union in about 2 weeks from now on the narrative reporting proposal, I would make it clear that the UK should support the current European Commission proposal on disclosure, because I think it improves the transparency and accountability of companies in the area of sustainability.